welcome everybody to part 2 of this webinar series, The Role of the Swedish State in Digital Payments. This seminar is a collab between the Digitalization Network in the Swedish Parliament, Crunchfish and the Swedish Trade Federation. My name is Joachim Järebring. I'm a Social Democratic member of the Swedish Parliament. I'm also head of the Social Democratic Digitalization Network. And together with Nils Parup Pedersen from the Swedish Centre Party, I host this webinars. And today we will have focus on the technical part of digital payments. And I'm really looking forward to listening to today's panelists. But without further ado, I want to hand it over to our moderator for today, CEO at Crunchfish, Joachim Samuelsson. Take it away.
Thank you, Joachim. No, it's exciting to be here. We have an exciting session ahead of us. It's going to focus on technical things. I think Christina Weishammer at the previous webinar, she said that digital payments is something that you use every day, but no one really knows how it works. At today's panel, we actually do have really some distinguished sort of people that have and quite an intricate understanding of how it works, and we will try to sort of describe that in this webinar, but also looking at opportunities, technical opportunities that exist for implementing what the Swedish state is trying to do. Today, sort of the Swedish state plays essentially two roles. They do settlement between banks. That's one role that the central bank is doing in Sweden. And they issue cash. But we have a special situation in Sweden. The cash is quickly disappearing. And Riksbanken is experimenting with issuing a digital currency to avoid being marginalized, because the Swedish state might become quite marginalized if their means of payment, meaning cash, is sort of disappearing as it's happening sort of at the market. So I think the Swedish central bank has asked the members of parliaments that what is the role that the Swedish state should have? And to discuss this from more of a technical aspect, we have a panelist with John Velisarius. He is the global head for central banking digital currency at Accenture, and also building this solution for the pilot for the Swedish digital currency. We have Magnus Lagersson, who is, he has many hats at Swish, product lead. He deals with partners and innovation at Swish, has a lot of understanding from about the digital payments market today. And then we have the Chief Technical Officer from Crunchfish that is pioneering an offline payment solution. These are our three panelists, and we're going to follow this agenda that has been sent out, where the first part is the roles and responsibility of the state and the private sector in the digital payments market. And I thought it would be good, just like we did in the first webinar, to start with someone that works closely with the central bank. To hand it over to you, John. You're building something for Riksbanken, this pilot for the e-krona, e-currency. Could you explain to us a little bit what are you up to, and what are you building, so people could relate to what this project is all about?
Sure, thank you. Thanks for the introduction. What I want to mention, I think, in terms of the solution that we're developing with the Riksbanken, for the Riksbanken, is basically a pilot. At this point, it's very much. I just want to make sure that people understand this is not a a sort of a final product solution to be rolled out into the marketplace. This is very much a pilot in implementation to test out a number of concepts and ideas that have been well defined from the Riksbanken initially from their what they've asked us to do. So we've embarked on a 1-year project, initially a 1-year project, which could be extended into a longer period as well, to help build out a number of different components of the solution. test out some of the hypotheses and the ideas and the concepts that you find obviously in the Riksbank and e-krona papers that have been published, to date. So now speaking a little bit more broadly in terms of the CBDC, central bank digital currency, which is what we're building at the end of the day, is sort of a technology architecture and solution that allows a central bank to issue a token, central bank digital currency token into the wider marketplace through a series of sort of intermediaries, basically the commercial banks, in order to be able to put into the hands of consumers these tokens to be used for person-to-person, person-to-merchant payments, and so on. So basically, as a digital form, a tokenized form, you could say, of cash, and as a replacement for banknotes and circulation. And this is the idea, right? At the end, this is sort of what you may be hearing a lot about this topic: central bank digital currency in the wider market, and specifically with Riksbank and the e-krona as well. And this is what others and ourselves have been working on with the Riksbank and with other projects that we're also involved in as well. Now, I just want to mention a couple of things with regards to this. We see sort of three major areas where CBDC could play a role. Our focus with the Riksbanken is specifically on the retail side, so consumer-oriented retail side, where commercial banks would put tokens into the hands of consumers through the channels that they have to date. There are other types of implementations in the wholesale space, for instance, where you could apply similar wholesale payments, bank to bank, commercial bank to commercial bank payments, and also for wholesale settlement of securities, for instance. That isn't the scope of the e-krona at this point. And there's also the broader cross-border dimension of being able to use currencies in different geographies, similar to what I can carry a banknote across a border and hold it, but may not be able to use it as such unless somebody accepts it, in a cross-border dimension. And that isn't sort of also the scope of the e-krona in the first phase of the work that we're doing. So I just wanted to mention that because there are other topics that you will see in other papers that talk about this topic, CBDC, and of course that those are relevant, but not necessarily in the scope of what we're doing for e-krona.
Okay, thank you. So a focus on the retail sector that is actually a means of payment, just like cash, that you can use it for retail. Exactly. That's sort of the main sort of focus. All right. No, thanks for that intro, Jon. Excellent. Let me turn to you, Magnus, just to get you into the discussion as well. Swish, the dominant sort of instant payment service here in Sweden. How do you see the Swish payment service in relation to the e-currency and maybe in relation to the central banking role as a whole? Can you give a little bit of a flavor of how you relate sort of Swish to the e-currency? Because a lot of people know Swish quite well as what is it, 80% of the Swedish population are using it.
Yeah, at least.
At least, yeah.
So yeah, I mean, we have more than 7 million active users every month, which is incredible. Almost 7.6 million, I think it's now. So I mean, that's incredible. So as you say, we are the dominant wallet in Sweden, and our figures are quite good compared to other countries as well when it comes to instant payments. And we believe that it's really good that these initiatives are ongoing with the Riksbanken. We have both the change of real-time settlement system, the Riksin system, which is also a very good thing for the Swedish society, because then you get everything settled in real time. And with Riksbank's money compared to commercial money, that's a very complex thing to describe. But then also e-krona, and I think as Jon mentioned, it's very important that we can collaborate in the market in order for everything to get the reach it deserves. And I mean, hopefully the e-krona project could be piloting with Swish, for instance, in order to reach different consumers and And yeah, I mean, we cover all age groups and everything. So I mean, we hope, of course, that we will be involved going forward and see how these collaborations could go on. Because yeah, I really would like to emphasize what John was saying. It's important that there is a collaboration between the national bank and the retail market, or the market actors as such, banks as well as us. I mean, we are bank owned, and of course, so it's goes hand in hand.
Yeah, yeah. But you, yeah, so you are relating to, as you said, to both services of the central bank, the settlement. You are even swapping from, you've had the bank developed sort of a settlement system, but you're going to migrate over to Riksinst, which is sort of, I don't know, the national sort of instant payment sort of settlement platform. Let me just, before I let Paul into the webinar, so why that change? Is that required to do, or is that something that you look forward to sort of rather be settling in central bank money rather than the sort of banking money, the digital banking money that you have been settling between banks as of today?
I mean, from an everyday person on the street, they won't really see the difference, I would say, because there will be no difference. But for the whole banking community, it's a very good step, because it will be a more reliable system, and there will be less risk associated with it today. And there is a lot of reasons, from liquidity and risks and so on. Yeah, I mean, I wouldn't say it's unsecure what we're doing today, but it's a lot of work which has to be managed by the banks and the central bank in order for it to work. But this new infrastructure will actually cater for a much smoother way. So yeah, we will be obliged to do the change, but we're still looking forward to it.
When is the swap happening?
Yeah, I don't know what is officially stated and so on, but it will be for Swish. It will be in 2022 sometime.
Okay. So still some years ahead that you will settle in central bank money, really. Yeah.
Yeah, but it's still not that long time.
No. I understand. Now you have to be prepared. Yeah. Now let me sort of get Paul Kronom in as well, Chief Technical Officer at Crunchfish, and. Obviously, I should say that as a disclaimer that we are colleagues, me and Paul, for this webinar. But Paul, I'll let it over to you. What do you think sort of Crunchfish could bring to the sort of Swedish digital payment market? What do we have to offer here?
Yeah, first of all, thank you for having me here, and it's very interesting already, the discussion. We have been working on various technology solutions for mobile phones a long time. And one area that we have worked a lot of is offline payment, basically. So it means that you don't have to have a service access for neither the customer or the merchant, or the payer or the payee. So it means that it's a robust system that we are developing. Even if the whole internet is down, you can still make payments peer-to-peer. And we do that by basically introducing some new concepts in a way, virtual secure elements, and we basically have a balance in each phone that you can use to make payments. So I think it's somewhere there is this mix, as you know, for instance, with all services, basically. If we take the music industry, we had CDs. We then got Spotify or Apple Pay music, and we could stream music. But then they added the possibility to download content. And the same trend will be in the digital payment space. That, yeah, first you introduce the cloud-based services, but then people will ask for the flexibility and the robustness to be able to do it offline. And that's what we are working on, that component.
Yeah. How, John, in the sort of system that you're building right now, I noticed that you sort of said that it's sort of like a tokenized, you distribute tokens, and token is like a vessel, isn't it? It's sort of a number, an ID, a transaction ID that can only be used once, and it's very similar to how the card rail is sort of working today. That's sort of what it's sort of built on, and but it's sort of an offline model. Is that sort of part of the scope today? Because I know we're talking about a value-based e-krona, which is supposed to be able that you can store it. You can sort of have it represented on sort of cards or mobile phones. But I guess it's sort of just the token that you're talking about. It's not the actual balance itself. Is that a fair statement, John?
Correct. Yeah. So I guess the container in which it's stored in, whether it's a card, whether it's a mobile device or a wearable device, I think those are necessary components of the solution. You need to have them so that you could store them securely, just like you would have just like you'd have a wallet to store your banknotes. It's a similar approach. You need to have some sort of secure container in which you can put these tokens in. It's important to also state that the offline component offline aspect of the solution is an incredibly important part of this, because similar to cash properties, you have the ability to make payments with one another without requiring sort of some sort of online or active intermediation or involvement. Now, clearly, on a day-to-day basis, you may want to have that, and of course, you probably should have that in order to enable it. But in situations where network is not available or power may not be available either, you may want to have the ability to make these kind of payments between individuals. So it is a key component of a solution. It's part and parcel. The offline aspect of it needs to be part of any type of a CBDC solution, I think, especially from a retail point of view, because not having it would create too much of a gap between what banknotes do today and what you should have in terms of a solution like this. And there's a plethora of choice, whether it's credit cards, debit cards, Swish payments, PayPal payments, all these different forms of electronic payments that exist today anyway. What is a CBDC going to address, from a consumer point of view, if it wasn't for being able to mirror much of the functionality that a cash can provide, but in a digital bearer instrument, in a digital world. So you need to have those kind of things like offline payments and so on. And I'm very encouraged to hear about what Magnus just mentioned, that about being able to transact through the RIX system for payments between sort of entities already through Swish in the future. This is slightly, an alignment of some of that from a consumer point of view, to be able to use central bank money, but in a tokenized format rather than in a messaging mechanism, behind this. So I do want to mention a couple of things. I think this is incredibly insightful conversation, but I think also from a consumer point of view, what does this really mean? I already have a lot of choice today anyway. And I think it's important to differentiate what such a solution would mean for consumers. And it's not that obvious. I think there needs to be a lot of discussion with, I guess, the consumers. There needs to be a proper sort of debate about this as well, and a discussion about this as well, because it's not obvious what central bank money is from a consumer perspective. I mean, most people would not understand that anyway. Their bank account money is central bank money, but it isn't. So there needs to be that discussion as well.
Yeah, if we, looking at sort of on the private sector, trying to fill the gap when cash is marginalized. Looking to you, Magnus, delivering the sort of the dominant sort of mobile payment service in the market when it comes to using the mobiles to pay. Could Swish fill this up? Is there an opportunity for Swish to do something in this area if the central bank didn't do it? Is this sort of a service that sort of Swish could provide?
I mean, technically wise, there is of course a lot of different opportunities, but as our system is currently, it's totally online. We need to have, we are relying on components which are both the Bank ID solution and also Swish, and that we really settle everything in real time towards a centralized system. But of course, there could be replaced with other components in order to solve it, of course. But I mean, I think it's important that there is a standardized way to do it, and therefore I believe that the e-currency track is a good way to go. But I truly believe that what you mentioned, that you need to solve the offline capability, because that's what we realize, that's the cash part we haven't really been able to take. I mean we have incredible figures for the cash reduction in Sweden, and we have been a big part of it, but it's still circulating. And then of course there is another part of the cash part, which is the anonymity part. Because some people choose not to use Swish because they want to be anonymous, and how can you address that with e-currency or a central money e-currency part? Because that's two areas where we of course have seen challenges.
Yeah. No, let's swap into the second area of discussion, really, that looking into a digitized market, the consequence or the risk with it, where the means of payment, which is truly local here, cash, when it's being marginalized. I think we have already touched on something. John, you mentioned the potential disruption that we could sort of see in the market, and we see today. And I know, Magnus, I don't know, does your son tell you that, Dad, you're on national news because Swish is down? You know, because that's typically every time it happens. You know, it's sort of published. Swish is down. It may not be you that is down, but it's some of your services. It could be you know, the electronic identification which is down, but it means that it can't be used. So we can have local disturbances for some time, for some hours, and given that you are so dominant, that creates a problem in a market that it takes away a means of payment. And then if people are not carrying cash anymore, then all of a sudden we are running into a problem. So let's look at disturbances, really, and both from both the perspective of say short-term disturbances, but also from the perspective that we discussed with the central bank in the last webinar, that the central bank needs to take a perspective also if we have a real crisis, that the tele network is down maybe for longer periods of time. This could be a war situation. This could be simply that there is some sort of major problem in the online services of today. And if cash is sort of not there anymore, or at least severely marginalized, then this could create a chaotic society that people can't really pay for their daily services, really. So I like to talk to you then, Paul. You know, digital payments is very much an online service, and you're saying an offline service is possible. So technically, what is sort of, why is that possible now, technically, to offer an offline component, and how safe is it? Because obviously there is a security aspect of this.
Yeah, so it's an interesting topic, because as you all know, technology develops extremely fast, and in the financial division, I think it's even faster. So what we are using is a couple of new and old technologies in combination. So we have a virtual secure element first, and that means that basically any app in a smartphone can have a smart wallet that is secured by a banking grade security. So we can actually store a balance, we can store tokens securely in each device. And that secure element will be then tied to that specific device and that specific application and that specific user. which is important. So since we have a balance, we have a high flexibility of creating payments basically from each wallet and make them addressable. So you make a payment, create a payment, and then you have an address. So it's only one receiver that can have any use for this payment. And since we have a balance locally, we have a flexibility in making different amounts in the payments. So we basically come very close to the behavior of physical cash, but in a digital form. To do it securely, it's of course basic signatures. We use signatures as you do in the tokenized world. So it's nothing new there. But the new thing is that we can securely store private keys in these secure elements. It means that we can sign dynamically. We can sign payments to different recipients, and also, as you mentioned, if there is a war scenario or a catastrophe, we can actually upload the balance in the secure element via paper mail. You can send a paper with a QR code, you can scan it, and then you top up your balance locally. So we are not dependent on internet access whatsoever, actually, to do these payments digitally.
And in a way, I think we is it turning to Magnus now and John with this, that we are in a way, cards have we've had physical cards, and they have migrated years back into mobiles using secure elements, hardware-based secure elements. How do you look upon that we could potentially also moving in cash into holding it locally, because we want to avoid the double spending problem. That's the key aspect here, that people shouldn't overspend, be able to run around and do multiple payments. And that's why you sort of want to track how much spending ability is available to in an offline scenario. I don't know if you, Magnus, or John, want to comment on how you see such thoughts here for your system.
I mean, I can take that one initially, and then obviously, please, Magnus, please add on to that. But I mean, I think from our perspective, this is one of the key architectural requirements that need to be addressed as part of any solution that you roll out in any kind of payment or cash or tokenized CBDC solution. The double spend problem is really the problem that we're solving with all this technology at the end of the day, the core one anyway. And I think that here, we've selected and we've worked with specific, ledgers and technologies to enable or to assure that is that isn't possible, right? That you cannot do that. Both in an online, of course, as you can do that online, and you can make sure that the transactions, the inputs and the outputs all add up and everything is fine, but also in an offline capacity, how you architect the solution around that. And I'm encouraged to hear, the developments that Paul and team you have done here. I think it's very interesting that you developed this. There are, of course, a number of different approaches and different ways to do this, but at the end of the day, it's key that you address it through these kind of solutions. There is, of course, additional requirements, and if we take a look at currency and how you implement, such a currency CBDC solution in the market, and e-krona or any other CBDC solution, there are a number of different requirements as well, and you combine them together with the ability to do this, peer-to-peer, privacy considerations, anonymity of transactions, offline, and so on, and you end up with a couple of what I would call sort of optimal configurations of solutions. And I think it's also, how we've also looked at the problem as well. So looking at retail requirements, and then configuring it in a certain way to address the set of requirements in an architecture that gets rolled out and implemented. But very, very important, the double spend problem is the core problem that we're trying to solve, that we're solving basically, whether online and or off. to address it, and you need that effective way, secure way, as well as in terms of convenient way for the consumer to use as well. So you need to think about how you address this in a way that makes sense as well. So I'm encouraged to hear about some of the developments that Paul and team have done. So that's very good.
Magnus, do you want to comment from your online world of online sort of payments?
No, but I also, I mean, I pretty much covered it earlier as well in the questions, and you put the question to me whether we could do it or not now. I mean, with solutions as Paul presented, I mean, then we could of course do similar things as could be reached by what we talk about when it comes to the currency part as well. But there is other strongholds, I would say, with the e-currency part as well. But it's also the same issue, and that's what you were mentioning when it comes to the ecosystem as such, where you have different. I mean, in our case, one bank can be down, and that has great impact. But with this offline capability, or like you have it locally on your wallet, then suddenly you are still truly digital and are not. Yeah, you can still process the payments, although parts of the ecosystem is bothered. So it's even when the full ecosystem is down, then it's hard, but sometimes we have difficulties, of course, when just one bank have failures. Then depending on the size of the bank, there is also headlines on the news.
Yeah, no, I know, and I feel it might tie well with the fact that it is actually, and if this is actually done in an offline mode that it's guaranteed by the state, that should be some assurance for the recipient that this money is actually like almost like a legal tender. This is something that I know that the Swedish bank or the Swedish central bank is backing this, rather than just maybe the Swish service or a particular bank within the Swish service. I guess it ties well with that.
Yes, definitely.
Magnus, one thing that you do for security is that I know you're proud of that. Is sort of strong customer authentication. You have sort of built that around. How do you see that? Could that be replicated in an offline scenario with having strong customer authentication? I know Swish is sort of priding itself that it is a very secure solution. And how does that translate in for an offline type of environment?
Yeah, but I mean, you could also, I mean, similar to what Paul mentioned, you can do for of course, for transaction or payments. You could do similar things also for authentication and authorization. There is of course always a risk with that you might have a small gap then when you cannot really check, but I mean, you will be online very soon again or whatever. I mean, you could tokenize your identity as well. That is how we see it could be built going forward, and of course as well. And then you can combine it with other means you have available as well, like a two-factor authentication using a biometric thing on your phone or on the card now, as we can see with solutions also for card industry now adding those possibilities. So yeah, I think there will be solutions for that going forward as well. But I'm sure Paul have more to add to that.
Do you want to comment on that, Paul?
Well, I mean, as you all point out, I mean, authentication can be done in many ways. I mean, and we in smartphones we have biometrics, so we can use that in various forms. There is also a hardware TEE, basically trusted execution environment that is connected normally to fingerprint readers, for instance. You can get strong authentication in that way. So and of course we are using some of those things in our solution as well. So I think it's if you only look back 1 year, I mean, it has been a tremendous development that fits this type of projects, I think. So and also since I'm just mention a little bit about the balance that we have locally, it's not only gives us flexibility. I just want to point out also that it actually solves one of the discussion points in this Sweden's Riksbank, they mean that, yeah, if you have in some implementations, it could be a problem that because you cannot have negative interest rate to control the economy. But if you have a balance, you actually have a value that you can use to calculate interest locally in all the secure elements, because they have their own time securely. So you can actually calculate negative interest rate. So you solve that problem as well by using this balance method, I think.
All right. Let's move on to we talked at the first webinar quite a lot about the importance of that people could be anonymous, because that is one of the traits of cash today. As was discussed, I think there are various levels here that can be implemented in terms of control here. I think one of the things that I think the central bank has pointed out, there is sort of two ways of implementing digital currency. It's sort of value-based, which is sort of can be represented and held on a user device like a card or a mobile phone. But then there is also account-based, and it's sort of two different things. The account-based is almost very similar to what Swish is doing today. It's sort of switching between accounts, but and that is sort of one thing, but that you can't be anonymous if you're going to do it that way. The way to be anonymous is to have a solution around the value-based e-currency, and then money laundering. I think EU rules has there's a limit on 250 euro, which is quite high. That you can actually you are still compliant with EU rules for up to 250. I know some early papers from central bank said that we have the biggest banknote in Sweden is 1,000 today. Perhaps we shouldn't go a bit beyond that. But we talked a lot because now we're coming into almost like a political decision. How much should we allow people to be sort of anonymous, and I'm sure that will be a topic of next discussion. The next webinar in 2 weeks will be with the political people from the members of parliament here. But John, could you comment a little bit on technically how you see the possibility of bringing out a e-currency allowing people to be anonymous?
Yeah, thank you for the question. Actually, we worked on a project a short while ago with the ECB on this exact same point, whether you can allow a varying degree of anonymity across the Eurosystem member countries that could use sort of different thresholds to maintain a certain level of anonymity for cash, CBDC-like cash transactions. And you would have a monthly sort of limit. You'd say, one country was 250, another one, and it actually varies by country. So it could be much higher in other ones and lower in other ones. And so you have a varying degree of anonymity. And there is, of course, a technical approach that we've taken to solve that, or to look at how to solving that problem. The results are published on the ECB paper, which I can, that you can download and it's available. So there is a mechanism by which you can allow a certain amount of anonymity on cash-like transactions in the CBDC sort of world. And I think but it comes down to how much you allow sort of those transactions and the users of the wallets to remain anonymous as well. So in a model that you had, enrolled, let's say you intermediated sort of such a solution through commercial banks, and you allowed consumers to enroll through the commercial banks to those kind of wallets where they can download and hold e-krona or CBDC onto those wallets. Then you would know who they are at all points anyway. You would know who these individuals are and how those were and who transacted. It's important to state, though, that in the solutions that we were looking at implementing, that this is a distributed ledger. In other words, there is a certain amount of confidentiality according to sort of the bank secrecy and the relationship a consumer has with their bank and with the other transacting parties. So if Joachim, I'm sending you, 100 kroner, my bank would know this, your bank would know this, you and I would know this, but nobody else would know this necessarily. So it preserves sort of the level of sort of bank secrecy that mirrors what exists today. And I think that's an important part of that, because otherwise you would end up with one big ledger or one big chain of transactions, and then you could inspect this, and then you would know where everybody spends everything, and that's just too much, right? You don't want that from a privacy and anonymity perspective. So there are ways that you can configure this, especially one of the reasons why we looked at distributed ledgers as part of the solution, because that preserves that level of bank secrecy and the anonymity that's the privacy, let's say, of those transactions. Now, that doesn't solve the problem of complete anonymity, right? And so at the end of the day, if you wanted complete anonymity in those kind of in sort of cash transactions, you wouldn't get it through this kind of solution. You could, however, implement something that allows you to have anonymous cards, for instance, or anonymous wallets. And then, of course, you have to caveat that and say, well, how much anonymity do you get if you have a registered wallet and device and so on? So let's park that for a second. But assuming that you can register for an anonymous card, for instance, and then you load it up with with money digitally or whatever, and then you can transact it on a day-to-day basis. Then you could set some thresholds on the wallet, and you could say, look, this card should not be able to store more than 250 euro equivalent of local currency, whatever that is, right? So you could say that you could block that and say this should not be used for any transactions holding more than those amount of tokens, for instance. And you can also put volume limits on that as well, and say, look, you cannot transact more than 10 times per whatever a certain amount over a period of time. And that way you can restrict how that's used for nefarious purposes and for money laundering and so on. So there are ways that you can control that. And you can still get the desired level of anonymity and also maintain sort of a level of usability where it's not really a vehicle for money laundering and those kind of operations. Of course, you can debate this, but let's assume that you can do that. So there are technical ways that you can achieve, maybe an acceptable degree of anonymity, because people still want to have that, and they still want to have the ability to access anonymous payments and stuff like that through these kind of channels. But at the same time, preserving sort of how laws and regulations and so on, and the compliance to those that is necessary to enable secure and efficient payment system for everybody.
Yeah, no, thank you, John. And I think it's important, and that plays well into our discussion for in 2 weeks when we bring in the politicians in a way, because this is a lot of this is sort of policy here. What do we allow? How much control should we have? And how much sort of freedom for being anonymous payers in the market? How much control do we have to implement? And obviously there's a balance here that has to be struck, and that I think is important in consideration. But it's good to know that it's as you see it, that technically it's possible to solve sort of things here. I got a question actually from the audience. Let me see. There is sort of someone who, this is for you, Paul, or maybe, I don't know if you want to answer it, Magnus, any one of you, but someone is asking, what is the benefit of a virtual secure element, as a secure element implemented in software, compared to a real physical secure element? So why would that be more interested, say, for, I don't know if you want to answer, Paul, or if you want to take it, Magnus, from a Swish point of view?
I can start.
What do you see?
I can start. It's a simple answer, actually. The virtual secure element would be more flexible to distribute among various smartphones. So it's a way to avoid to be dependent on the various fragmentation on the secure element implementations in hardware. Some devices has a lot of features, some doesn't. By using a virtual secure element, you can deploy them over most smartphones. And you can also have multiple instances for each application, you can have a different wallet if you would like. So it gives you more flexibility basically for in the software variant. And it's easier to update, of course, upgrade. You can upgrade the secure elements when you have internet connection. So yeah, flexibility, I would say first.
Would you agree with that, Magnus, as well?
Yes, I do. I think, as Paul mentioned, provisioning is key.
Yeah. We got another question. Let's sort of take them as we are into Q&A now. Maybe, John, you have a very much an international perspective, being the global head for CBDC in Accenture. What is your opinion of the role of international standards that's developed within ISO for this topic? Is this something that, I don't know, are you the right person to answer this, John, or can you have a shot at it?
Well, yeah, no, I this is one of the topics that I speak about very regularly, and I think it is also a very important topic that, and depending on sort of, which organizations that are involved in this. So obviously there are central banks that are looking to issue a CBDC. There are technology companies that are sort of they're providing technologies that can enable this kind of solution to be implemented. And then there's a whole ecosystem of point of sale devices, cards, payment mechanisms, mobile phones, and so on. So the whole internet, the whole standards topic is a very, very big topic. I'm not sure. It's still not very clear who is the best, body to actually drive the standardization debate. But it's very obvious that it's something that absolutely needs to be looked at. There are entities like the BIS, for instance, that are, the central bank of central bankers. There's also central banks themselves that are looking at this. And if they're the first one, do they de facto define the standard? Is it the biggest central bank that implements it, that defines the standard? Is it a collection of central banks that come together to help develop the standardization work? Is it technology companies that are working together to also look at this and how they can combine efforts and define this? There's a lot of different entities, including sort of ISO, ITU, IWA, a lot of three-letter acronym organizations that have come together to look at standardization on this topic. I don't know where it'll end up. I think at the end of the day, it'll be driven by need. It'll be driven by urgency. I think it'll be what we don't want to end up is in a situation where anyone implementing such a solution ends up on an island. And interoperability becomes very difficult. And so I think this is part of the challenge. And I think it's a very important one that needs to be looked at. It needs to also be driven by sort of the entities that have the most, I think, to lose by implementing something that is potentially, isolates them for whatever reason. And I think there's a lot of also technology innovation that needs to happen. If you take a look at sort of, solution stack from vendor A and solution stack from vendor B and C and so on, or even open source standards as well, it isn't very clear how interoperability between these will work, I think, at the end. So if you start implementing a solution, you definitely don't want to end up in a situation where what you've implemented is not usable by others and neighboring countries and what have you. So I think all of these things play a very, very important role. I'm afraid I don't have the answer. I have even more questions than answers. But it is a topic that we are, I think, as a wider community, beginning to address. I think look at this very, very carefully. And I know that there are entities that I mentioned, names or organizations that have looked at this, and that will continue to spend more time on this topic. And I think that's absolutely needed. And the industry as a whole will have to also be involved in this to make sure that whatever is defined as a standard can be implemented and so on. In an ideal world, we end up with a standard that is defined that could be implemented across a number of different solutions, and that the things that we roll out become usable, across many different countries and technology platforms. And I equate this to sort of the banknote and the wallet. Today we have banknotes of different sizes. We don't have outrageously large ones, but we have different sizes, but they all fit in a standard wallet. Sometimes they pop out, but in essence, they work at the end of the day. And I think that's the level of, ideologically sort of the kind of interoperability that we need. Definition of a wallet that can hold multiple currencies that could be used, and then transacting those, regardless of country in which you go to and how you use them.
Yeah. No, so there's a need for some standardization here, but it's sort of like an open area right now. Thanks for a good perspective on that.
To Joachim, I would just like to jump in on this. I think this is actually an area where the financial industry has a big problem. Other industries, I have a background from telecom industry, they know how to do standards and they follow them. But there is a history in finance industry that you say you have standards, but people don't really know the definition of a standard. And you mix what is a standard scheme and a standard of doing things and what is a format. ISO do an incredibly good job with the format, and that is the most important part of the standard. And that was what it should be focused on. And then it would be up to the market to actually follow and execute on the formats which are there. And now with the CBDC part, there is actually an opportunity to actually, for the first time ever within the financial industry, create standards, which I really hope will be the case. But that's my personal opinion, but I have experience from different industries in this. And
that's good. That's good. Perfect. Let us. We have less than 10 minutes to go, and the third area, and I think we've touched on it, but it's looking at the digital currency here. Is that a risk, or no? Sorry, is that a solution that? For these risks that we are facing here in Sweden, moving quickly into a cashless economy, and what is then the requirements for this sort of e-currency? What are the key requirements that we feel that we need to pass on? I know central bank has worked on this a lot, but from a technical perspective and from your perspective as technical evangelist for this area, sort of what do you see? What does this e-currency need to have? I don't know, John, do you want to have a first go at this wide open question, but still?
Yeah, I mean, I think that portability, I mean, usage of it, it needs to be, something that can be transacted both, in person, online, and not as necessarily as a replacement for other payment systems, but as a mechanism by which I can hold value and transact it like I do a banknote. Right? I mean, I think there's a lot of very interesting things that banknotes have, attributes that banknotes have, and I think mirroring many of those in a digital tokenized bearer instrument model, digital, of course, I think is sort of the I would say the purpose of this at the end of the day. It's not as a replacement as a payment system, because there's plenty of those and they work very well. So there's no reason why we should continue to pursue that. I think part of the requirement as well is to look at it as this is a utility. It's a public utility. Today, money is a public utility. We use it as a way to transact and pay each other, and so on. And I think this gives us the ability to create this utility, and to also provide an alternative payment rail. So when those payment rails that we're using today fail, for instance, we have a fallback mechanism, cash, but we don't have access to cash, or very little of it these days. So how can we use a digital version of this cash to be able to pay each other? And I think people will understand that a little bit better if that's what we are trying to do with this. I think if we're trying to replace it as another payment mechanism, I think that's not maybe the best way to go. I think in terms of sort of these kind of CBDC solutions. Things like offline, things like in terms of usage for times of national crisis, both situations where the network is down and not available for whatever reason. It could be a number of them, or also to be able to distribute money in emergency situations to consumers, so that they can pay each other. In short term, it's not it may not be critical, but after a day or 2 or 3, when people can't access their money anymore, then can't pay for anything anymore, how does society continue to work? I think those are interesting questions that we will struggle with if in an increasingly digitized world, if we don't have access to these kind of mechanisms to enable that. And that's where the public utilities aspect of it is very important. Right. So I think using this as a basis, how can we make our society more resilient to these kind of shocks, these kind of when we don't have access to these kind of methods of payment and so on, and methods of paying each other with tokenized forms of cash, as I just described here. And I think also some people will look at it as a store of value and a wealth, putting their money in and so on. I don't know whether this is not meant as a replacement for sort of, the commercial banks, deposits and things like that. This is more meant as a mechanism for, like you use today, cash in those kind of situations.
Aspect of it, yeah. How about you, Magnus? How do you see for the e-currency sort of? What's key here, Magnus, in your opinion?
I think we have covered it quite a lot, and I think John mentioned it as well. I mean, it's the offline capabilities, so you really can replace the cash which is left in Sweden, at least if you have that perspective. And then I think the privacy part need to be solved in one way or another. And yeah, so I think those are the key things which would make the last cash not necessary, so to say.
Yeah. What's your feeling, Paul? Would you agree, or do you have anything to add here?
I think it's good, valid points. But it's also, I think there is actually an environmental aspect as well. I mean, to print a lot of money, paper, doesn't make sense in too big extent. And also we can do the whole interaction on your own device. So you don't have to, as today, you put in cards in terminals, press a lot of buttons on other devices. We can remove all that. Why shouldn't you be able to interact with your own device that you have with you all the time? You can pay also, and you can pay freely offline. So it's for me, it's a lot about freedom. Actually, you can expect to do your payments digitally in a controlled manner.
Thanks. Let me round off there. I think it's been. I want to thank the panel. I think thanks for so many different perspectives. We have 2 minutes to go, and I promised our the member of Parliament here, Joachim Järbrink, to have the final word and give his sort of perspective on things. So over to you, back to you, Joachim, I should say.
Thank you, and I hope you all thought this to be as interesting as I did, and a warm thank you to our panelists, Paul, John, and Magnus. For me, not being an expert by any stretch of the imagination, this webinar added valuable knowledge in understanding the digital payment of the future. And I will for sure take heart that security and redundancy is crucial for future technical architecture for digital payment, especially entering a cashless society. Next webinar, we will be broadcasting at the 4th of November. And as you all know, with a panel of parliamentarians from the Finance Committee of the Swedish Parliament. And that webinar will be about policymaking and thoughts regarding the role of the Swedish state in digital payments. And last but not least, thanks to Joachim for excellent moderating. And thanks you all for watching, and hope to see you all again next time.